everybody. Welcome back to another episode. Today, I've got Yonah on the show. Yonah is a powerhouse with property owners tax savings. You guys are going to want to listen to this if you're looking to save money and capture depreciation. You're also going to want to know about the laws that are coming up and how things are changing. As a business director at Madison Specs, SPECS, he is a national cost segregation leader. He's assisted clients in saving hundreds of millions of dollars on taxes through cost segregation. He has a background in teaching and a passion for real estate and helping others. He's a real estate investor himself and the host of the top-rated podcast, Wise Advice. Yonah, it's great to have you on, my man. How are you doing?
Great to be here, Brandon. Thanks so much for having me.
Yeah, no, I'm excited to have you on, especially someone in the seat that somebody like you has, where you have read through all the legal stuff that nobody wants to do, and you've deciphered the tax laws. And God bless your soul for doing that, because guys like me rely on guys like you to be able to do things. But before we jump into your business and kind of helping clients, and I'm really interested to understand kind of how you've built this incredible community. Tell us a little bit about your background and your story and kind of how you got to what you're doing today.
Absolutely. Thanks again for having me. Background. So, cost segregation is one of those things that, nobody in kindergarten writes down that they want to be when they grow up, a cost segregation expert. But what I was actually a teacher for many years, for about 15 years. And at a certain point, about 8 years ago, I had some little bit of family crisis, some health issues in immediate family, and really shook up my whole world in a lot of ways, and really had to make some major decisions. Financially, was one of them, and I realized I needed to find another job or an alternative to teaching because it just wasn't cutting it. And besides for the debt and the medical expenses, et cetera, I needed something new. And reaching out to friends and acquaintances, real estate kept coming up in conversation. And I realized quickly that that was probably the best option for me to just do something because number one, it didn't require any formal education necessarily. And it also, meaning I didn't need to go back to school, which I was not interested in doing. And simultaneously, it has the potential for the most, income possible, really. I mean, yes, you can have e-commerce and all kinds of businesses, but doing something in the real estate world is essentially, I mean, there's no ceiling to that. And both of those were very attractive to me. And so I got started with a good friend of mine who actually mentored me, and I apprenticed him essentially. He was a hard money lender and broker, mortgage broker, and he owned a few multifamily properties and self-managed them, et cetera. So I really got a lot just from literally sitting with him in his office for about 9 months. We did a lot of cold calling, we did a lot of outreaching. I learned how to underwrite. I learned all of the terms of commercial real estate in that time, and I was just like blown away. And that really jump started my whole, this whole new venture, this whole new career path, so to speak. But my passion has always been teaching. And so when I was offered this position with Madison Specs, which is the largest national cost segregation company, and they were looking for someone in business development, which essentially meant teaching, learning this very difficult concept, and then giving webinars and talks and podcasts and all kinds of things like that, just essentially teaching the subject. That to me was very attractive. And essentially what it's done for me is allowed me to network with some of the top people in the whole real estate world, open up my horizons, allowed me to invest in real estate through those relationships, et cetera, and become, quickly I became like the expert on the topic in the country. And it was really due to, I'd say, first of all, divine providence. I mean, obviously everything happens for a reason, and I truly believe that. But a lot of the background that I had just allowed me to kind of fit into that position very nicely.
So, for those listening that maybe are not familiar with cost segregation, and I want to do a deep dive for those that are. So, if you're listening to this and you're like, cost segregation, we're already doing that. Stay tuned, because I want to really dive deep with Yonah on the differences in the companies that you can hire, because they can make a huge difference. But for those listening that don't know what cost segregation is,
Mhm.
maybe they're newer investors, maybe they've got a portfolio of single family properties that they're like, I've heard of this depreciation thing before, or maybe they're trying to get into multifamily and doing their first deal, or maybe they're a limited partner any multifamily deal, and the sponsor has touted depreciation as being one of these great benefits of
Yeah.
investing in this. You kind of explain like what exactly it is that you do for investors and how that impacts limited partners like yourself who invest in deals but are not actively managing it.
Sure. Yeah. I mean, a lot to break down there, but let's start at the beginning, which is very simply cost segregation is a weird name for this tax benefit or tax strategy called accelerating depreciation. So essentially, anytime you buy a property, any property whatsoever, whether it's business, residential, commercial, you name it, rental property, as long as it's not your primary residence, any type of property, the government allows you to take an income tax deduction called depreciation. And it's not what it sounds like. It sounds like, oh, depreciation is always going down in value. I don't want my building to go down in value. I don't want to do with that, right? No, what it is essentially is saying that because you bought a property, now you're able to write off the value of that property as if it were going down in value, even though it's not. Meaning it's your property is actually appreciating, it's actually going up in value, but you're able to take this tax write-off as if it were going down in value. And so that's a powerful tool in of itself. What cost segregation does is, again, weird name, but essentially what we're doing is we're segregating the cost of that property into different categories, into different buckets. Certain components of the property actually depreciate on different schedules, meaning you can take the value of furniture and fixtures and appliances, equipment, etc., on a 5-year depreciation basis, meaning you can take those deductions at a much faster rate than the longer 39 years or 27 and a half year schedule that your property needs to be depreciated on. So essentially what we're doing with cost seg is it's an uh, engineering base, I guess what you call it, like a study, similar to an appraisal, or literally breaking down the property into all of its components and showing and detailing how every single one of those components depreciates and therefore take these bigger tax deductions during their earlier years of ownership. So too long, didn't listen, right? It's a cash flow mechanism that allows you to have more deductions, allowing you to scale your business faster.
Yeah, it allows you to offset your income that you make from the properties to not basically almost avoid taxes in most cases, but or at least be able to write off a generous portion of it. So that's the biggest thing you're going to pay is taxes. If you can avoid paying taxes, your money compounds faster and you can reach financial independence sooner. Now, who who qualifies for this? So typically in, a lot of syndications that I'm guessing you're a part of, like we do, and we're kind of situated a little bit differently because we're not doing quite as much multifamily as everybody else. We're mainly doing land and built to sell entry level single family homes. So we haven't done a whole lot of this
Mhm.
depreciation thing, but it's a very powerful vehicle. Who qualifies for this? Because typically you've got the limited partners that are investing the capital in the deal. A lot of the times they're not real estate professional status. They're doctors, they're lawyers, Main Street, average Joe people who are investing,
Yeah,
and then you've got usually the real estate professional status
right.
individuals under the tax code that are actively managing the deal. So how does this cost seg affect both of those parties in the
Yeah.
syndication?
Absolutely. So let's break that down. So a couple of things to break down here: the real estate professional status, how depreciation works in general, and how real estate works in terms of your taxes. And again, you mentioned at the beginning, this is stuff that most people, right? You hear about taxes and you're like, people's brains shut off, right? Like, I don't want to. This is actually pretty simple, very simple if you look at it like this. Real estate or rental property income is treated as passive income by the IRS, even though you and I know, right? There's nothing passive about investing in real estate unless you are truly a limited partner. And even that is not entirely passive because you have to do rigorous due diligence to be able to know who to invest with and what to invest in, et cetera. But the IRS treats any income coming from rental properties, whether that's active or passive, as passive income. Now, depreciation as a deduction can only be used to offset that passive income. Okay. And so accelerated depreciation cost segregation, which is, accelerating that tremendously, is usually limited only to offset that passive income. There are a couple exceptions, and the most notable one you mentioned in passing the real estate professional status, I'll touch on that in a second, but just to understand how that works. If you invest in a deal, okay, That means any income that you get from that property you'll be able to use depreciation and cost seg to offset that income. So there's essentially no other investment vehicle that allows you to invest in it, get returns on that investment, and actually not pay any taxes on it during the hold period, which is pretty incredible in of itself. So, from a limited partner perspective, someone who has a W-2, someone who's not a real estate professional, you still have that huge benefit that you're able to, get returns on your investment and pay little to no taxes on it whatsoever. However, like I said, those deductions are limited. So doing a cost seg can double or triple the amount of deductions you have. But what ends up happening is you have more deductions than you actually have income from the passive income. The biggest exception to this rule of the limitations is, like you said, the real estate professional. If you or your spouse, and this is probably the most important part of it, is that you don't need to be a real estate professional if your spouse is, or vice versa. And as long as one of you meets those qualifications, which means you're full time in the real estate trader business, you have a minimum of 750 hours a year materially participating in that business, whether it's being a broker, managing, operating, doing construction, etc., acquiring properties, all that stuff makes you a real estate professional. The IRS says if you have that occupation, you don't you're able to use cost seg and depreciation to offset your active income as well, your W-2 income. So this is really the main difference when you talk about a GP versus an LP, general partner, limited partner investing, is that oftentimes the general partners are real estate professionals and can use that cost seg and those deductions not only to offset your passive income, the income from the properties, but also to spill over to any other source of income that you have. And so that's a huge, huge difference. And like I said, if your spouse is a real estate professional and you're a high paying, W-2 earner or vice versa, then investing in real estate is probably the best of both worlds.
So let's unpack that. You said a lot there, and let's clarify. And just for those listening, real estate professional status, Yonah said it, that's 750 hours a year spent doing, real estate stuff, whether it's an investor, broker, agent, whatever that is, right? So that's kind of like the key here to sort of unlock this magic benefit if you're a spouse that is married to someone who has a W-2 job, or you're married to someone who has this real estate professional job. So listen up to this. So just to clarify, if I'm a doctor and I'm just I own my own practice. I'm not married, and I invest into a real estate syndication, and I'm excited about this depreciation that the sponsor's talking about. That depreciation is only going to apply to the income that I receive from that investment and offset it. It's not going to apply from my practice, right?
I mean, and that's a huge that you're exactly right. And that's a huge difference because a lot of people think, and unfortunately, there's a lot of misinformation out there on the internet. Like, yeah, do a
Mm.
cost seg and then you don't pay any taxes whatsoever. Unfortunately, it's not like that. I mean, there are certain scenarios where you can use those deductions, you can use cost seg to offset income, certain areas of income, and there are other exceptions to the rule besides for the real estate professional status. But essentially, if you are a doctor, like you mentioned, you're going to be limited to just use the cost seg to offset passive income.
Okay. Same scenario. I'm a doctor. I've got my own practice, but I'm now married to a spouse who has the real estate professional status income. She's in, build to rent, multifamily, commercial, and she's going out doing her thing and using, you know, people like you to help her break down the real estate investments that she and I own as a doctor to get that depreciation benefit. Now, because we're filing jointly, it's a joint income and she has this real estate professional status, that now that depreciation, I can now write that off against my income that I'm making with the practice. Is that understood?
Yeah, that's exactly right.
Huge,
Huge.
huge, absolutely huge. If you didn't get that, you need to go back and listen to that because that is the key here. If you have high taxes as a high W-2 income earner, um, you need to make your spouse go get a real estate professional status or figure out how to go marry one. Okay, so moving on here, cost segregation, um great, cool to be able to reduce the amount that you pay in taxes, whether married or if you're a real estate professional status. I've heard that not all cost segregation companies are created equal. And obviously, you've built a fantastic reputation as someone who provides some top level services. Maybe speak to why not all cost segregation companies are created equal. What have you noticed in your tenure that's really allowed the companies that excel versus the companies that don't?
And there's been a lot of new companies popping up over the years also, because it's been so popular, especially with the bonus depreciation law that passed in 2017. It's been a lot of new companies pop up there. But the biggest factor when looking in any type of vendor, and a lot of people look at it as a commodity, it's a service, and I respect that. It definitely is. I'm in the relationship business, which means my main focus is finding those people that I connect with the most, educating people, as I mentioned earlier on, and making those connections and seeing what I can do to help people personally beyond just the cost seg in of itself. And so for me personally, that's how I look at it. But in the companies itself, there's a couple key factors that one needs to look at. Number one is the experience, right? You want to make sure this is not just some fly by night, person. This is someone that has, a lot of experience in doing this, both on the tax side, the engineering side, et cetera. So that's one thing. The second thing, and probably more important than the experience, is uh, the actual audit protection, meaning anything related to taxes, you want to make sure that this is legal, number one. And obviously, cost segregation is not only legal, it's considered by the IRS the correct way to depreciate your property. So you actually should be doing a cost seg on every commercial or any type of property. However, you're not required to, because the IRS does not expect someone to go out and hire a third party firm to do this, even though they're going to get more tax benefits from it. Nevertheless, it's certainly legal. However, there's rules. Anything that is, you're doing in the tax code, you have to make sure you're following the rules. So there's something called the Cost Segregation Audit Techniques Guide. And this
Mhm.
is, you can find this on the IRS's website. And you want to make sure that whoever is doing this is following that to a T. Now, there have been certain companies, I'm not going to name names, obviously, that have popped up over the past several years that have tried to do things on a more, like everything in this world, in our society, we want to automate stuff. We want to make sure that stuff is, user friendly and everything like that as much as possible. Well, guess what? There have been some companies popping up that are what's called, do it yourself cost segregation, DIY, or something like that, which means it's just a software program that allows you to apparently do a cost segregation without actually doing a cost segregation, right? Meaning just enter some data points and it'll pop out a new depreciation schedule and show you what kind of tax deductions you can take. Now, that may sound and look great, and obviously is a fraction of the cost of getting a full engineering cost segregation study. However, it will not hold up in an audit if a person is ever audited. And so it may seem like a really easy solution, like I'll just pay a couple $100. This will tell me what my tax deductions are going to be, and then I'll pay, very little taxes. Unfortunately, um, like I said, it will not hold up in an audit. And so that's a big risk that you're going to be taking doing that.
Okay. So a couple things that you mentioned there was avoid automation and really going over and beyond. So really understanding what your client's individual needs are instead of them
Mhm.
just kind of being like a number, and building your services around those specific needs. Now, I know I'm kind of putting you on the spot here, but maybe
Yeah.
you can tell us like a story of like, is there a client that was just wow, that really stood out in your mind? And maybe this past year, past few years, I know 2023 was a tough year and a lot of transaction volume was down. But maybe tell the audience like a story of someone that you met and was able to help with your service, and more specifically how you were able to individualize their needs and create a product or service around those specific needs.
Yeah. I think one of the best stories that I love, and we talked about the real estate professional status. People who are real estate brokers or realtors don't realize the power of cost segregation until they actually get it done. And so this story is about someone who is in that exact situation, someone who is one of the top brokers in their county in California, very big county, and they were like top performing agent for years and years. And literally, California is obviously a huge, when it comes to taxes, is known for very high taxes. He was paying literally $300,000 to $400,000 to the IRS every single year. He was, making seven figures and was just getting hit hard, right? He also owned for years, he was, investing in rental properties. He sold, single families, he sold houses, but he had some experience in rental properties. So he had a few multifamily properties. And he ended up reading this book called Tax Free Wealth by Tom Wheelwright, the Rich Dad Advisor. He was Robert Kiyosaki's, advisor. And in that book, he talks about depreciation. There's a whole chapter on depreciation, talks about cost segregation as being the king of all deductions. That's what he calls it. And this guy was blown away by it. He was like, I never heard of this before. And here I am, paying all this money. So he reached out to me. We ended up looking at his portfolio, and he had just made an acquisition that year. And this was still, 2022, where there was still 100% bonus depreciation. And he was able to buy a multifamily property for about $4.5 million, and ended up, because of that property, was able to take a $1 million, little over $1 million tax write-off from the bonus depreciation on that property. So he literally wiped out his entire tax liability, because instead of paying, $300,000 to the IRS, he paid zero, which meant all of that money he could then use to reinvest, which is exactly what he did because he's a smart investor. And so he was able to, take that, and not only did it change, his business model, because now he could have more money to reinvest, but it freed up so much stress from his life. I mean, taxes cause so much stress because it's the biggest expense that any business or individual has. And so that was a huge story. I love that, because he came back to me like almost crying with tears in his eyes, like telling me what we did when we ended up doing that bonus depreciation. So that was huge. I think I do want to highlight another story, because it goes to the same kind of result, but in a very different scenario. And so we talked about the real estate professional status, which is obviously clear, but there's something else. There's another exception to that rule that I love to touch on when I do these podcasts, which is called the short-term rental loophole. Okay, and this is a rule specifically with regards to short-term rentals. So Airbnbs, 7 day or less properties that you own. This is one of the other exceptions, that if you own and self-manage a short-term rental, you can then use those deductions to offset your active income, which means you do not need to be a real estate professional. The threshold is much, much, much lower. It's like 100 hours a year plus more time than anyone else. So essentially, if you're self-managing a property, you can meet those requirements. And I have several, I mean, dozens of medical professionals and, high earning, IT people that own and invest in short-term rentals on the side. They're full-time in their medical profession, but they're doing that. And so I have a good friend who, he and his wife were both in the medical profession. I think he was a respiratory therapist, something like that, whatever. He and his wife were both in the medical profession for years. And anyone who's in the medical profession knows that you have a lot of student debt, right? And probably the first 10 years or so of being in the profession, you're making, very little money. You're just paying paycheck to paycheck, essentially. And that was this guy's scenario. He found about real estate, actually owned a couple of single families, weren't really cash flowing, but he learned about this short-term rental rule, started investing, self-managing, scaled in the first year to 5 properties, because he was able to use the money from the cost seg that he would have paid in taxes to invest and buy another property. And so he was able to scale pretty quickly. And literally the money that he saved on taxes from, from doing the cost segregation was enough to put a down payment on a whole other property, which each property was making, grossing, over $100,000 a year. And so
Wow.
after 2 years of doing this, of kind of scaling his business, he and his wife were both able to fully retire and just focus on their short-term rental business, which in his words says he spends about a half an hour a week per property on his short-term rentals.
That's awesome. So just to clarify, he did not have the real estate professional status because he was not doing 750 hours per year as a real
Right.
estate professional. He was a medical professional, but
Hmm.
he owned a portfolio of short-term rentals, and I guess he met the minimum requirement there, which I think you said was like 100 hours,
Right.
managing those rentals, and so therefore he automatically qualified for this benefit to use his depreciation from his rentals to not only offset what he made from the short-term rentals, but also his medical income.
Yeah, exactly. Crazy.
Wow. That's something new. I just learned something with short-term rentals. Wow, that's huge. Saves you 650 hours a year.
And it's doable. That's the thing, because someone who's a business professional is not going to have the time, and impossible to be a full-time real estate professional. And so you think, oh, there's these limitations. There's not. I mean, you can really do this.
That's amazing. I want to pivot real quick because I want to get to your community. I'm a part of it, and you've built an online community for commercial real estate investors. People who are looking to like grow their presence. Can you speak to that a little bit about what that is and who that helps?
Yeah, a lot of it's just been um, just helping people, because part of my whole, experience in this world, I've seen like, what can I do to help other people? And that's how I've kind of been brought up, and that's kind of how I'm doing it. And even with the Cossack itself, yes, it's a business, but at the same time, I'm essentially just helping people save money on taxes. So you talk about this online community that I've created on LinkedIn specifically. It's an incredible community. It's an incredible space for networking. And I've found so much benefit over the years from posting and engaging on the platform that I felt like I needed to share this wisdom, and share the methods that I've used to make it more available for other people. And so mentoring people. And so I created this thing called a 10-day LinkedIn challenge that I started several years ago, which I do like once a quarter. And essentially what it is showing people and teaching people how to post and engage consistently on LinkedIn by just doing it every day and stepping out of your comfort zone together with a group of other people that are doing the same thing. So there's accountability, there's encouragement, and it's literally, I mean, it's kind of cliche to say people like it's changed their lives. It's literally changed lives of people through doing this challenge. And so to me, that's like the greatest gift that I can see is what can I do to help people? This is an incredible form of doing that, because yes, I actually personally, just kind of speak selfishly a little bit, is that I get business out of that, because the more you're recognized, and that's why I do LinkedIn in general, right? It's the business development, it's the networking. The more people know who you are, the more people are going to do business with you. It's just simple facts, right? The know, like, and trust factor. The first one and the most important one is know. People have to know you in order to like and trust you, and to do business with you. So that, to me, the publicity, the marketing that comes along with that, um, it's amazing, and it increases, and so many different things also, in terms of your um, communication skills, and copywriting is such a huge talent to have these days. It's so underrated, and everything else that goes around with it. And we talk about like how marketing and how LinkedIn and social media, et cetera, how important it is. Literally, when I go to in-person events, which I think is probably the most important part, going to in-person events and doing stuff like that. When I go to these events, people already know me because of the social media. And so you don't have that kind of hurdle of, I have to walk up to people I don't know, et cetera. People come to you. And so it's actually creating those warm relationships, that is really business just flows out of.
Yeah, I love it, man. Now, thank you for putting together the community. If people want to get in touch with you, learn more about you, learn more about your services, where should they go?
I mean, obviously, LinkedIn, we just talked about that. You can find me there. You can also go to yonahweiss.com. That's my website. Talk a lot about Cossack there. The other things we're doing, including my podcast, Weiss Advice, which would love to host successful real estate investors and just learn from them. So, yeah, feel free to reach out.
We'll make sure those links get posted. Yon, it's been a pleasure having you on.
Oh, pleasure's been mine, Brandon. Thanks so much.